What's up, everyone? Is the sound clear? Because I was having a little trouble today with my microphone. I was like packing it, and then I forgot that I still have to do the live stream. I'm packing it to actually go have some holiday. So let me know if that's all fine. If you can see me, everything else. I want to talk today about models because I've seen a lot of angry people lately on Plan B. For example, for Plan B making people lose millions or whatever. And frankly, it doesn't make sense to me. I mean, models break, and even when models, even when they break, they can still be useful. And the question is, when does a model actually break? A lot of people will say it breaks because I lost a ton of money. Oh yeah, dude, this beard, it grows so fast, and I'm gonna be around in Greece and further east, so it's gonna be even hotter than here. So it's like, I mean, imagine me going there, not coming back with a tan below my beard, and just sweating my face off, and then having like a wet beard, um, a little dirty. I'm just gonna do a quick retweet that we're live because you need to get a few more people in here. I mean, while you're doing that, grab a drink. We're going to be talking about a bunch of my models and where I think, my models tell me where the market could extremely go. Yeah, 4 minutes. 4 minutes, man. 4 minutes. After this stream, it's going to be big again. Just watch it grow during the stream. What's up, Crypto BT, Roland? Uli, welcome guys. Lord of the Flings. All right. 1 second here, man. My head is like already partially in grease. Come watch the stream, homies. I'm tweeting on my phone. Okay. Anyhow, that out of the way, I think we're good to go. I had to make a little adjustment to my recording setup because I'm gonna need the width on the screen, so you'll see the chat disappear a little bit. But let's just quickly go over a few charts that I want to talk about later in the stream. So this is me just I quickly created some stock to flow kind of to show the stock to flow thing and visualize it, and then I created this standard deviation 3, negative standard deviation 3 calculation on it, and we're going to jump into that because actually it's still useful. I mean, we're not at 100k plus, but it's still useful. So that will be something that we're going to be talking about. This is one of my models, and has actually 4 things to the bottom to help it out, but the general gist is that when it turns orange, we're early buyers. Back in 2012, that was a really good idea, early buying, because it already let's see, hopped a full 250%, and then in 2014 it was actually a little bit early because it still dumped another still dumped another 60%, which is quite a lot. And then here it was quite early. A majority of it was actually at the bottom, and then when you see this merge between the gray and the orange, that's where you do majority buying long term. And when it's gray, you're actually late, and here you were lucky because March 2020 happened, but here you were actually already on the late side. We're going to talk about this later. Really cool model algorithm. I don't know how you want to call it, but it's, in my opinion, a cool one. And this is another one. it's been actually very helpful, because if we go back to this one, it doesn't really help you out on, you know, timing the tops that much. This one actually, you know, has done it every cycle again. Here, 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 and here. I'm going to talk about how we're going to use this. Because this one and this one are going to be my main two models using forward to time the bottom. If I'm lucky enough, okay? Because, you know, models break. And we're going to talk about this as well later. But before we jump in, guys, I want to get your attention for Ledin. They're sponsoring this video. And, you know, when you think about Ledin, think about a digital asset savings account. And one that actually does a good job at making sure all the assets are there and they're solvent. Unlike some of their competitors lately have been doing a very poor job. The great thing about Ledin is they actually only focus on USDC and Bitcoin, which makes it, you know, there's a lot less counterparty risk involved, and they work with clean lenders in the space. So I think they're worth checking out. They're sponsoring these videos. So, you know, save, borrow. And actually that 7.5% API in USDC, it's pretty nice. The 5.25% API in Bitcoin is actually only for the first like 0.1 Bitcoin or something. So, you know, if you like these videos, you know, consider them, sign up, look around, let me know what you think. And, you know, I'm very grateful for Ledin to sponsor these videos and make their way to you. Proof of reserves, guys, they have it. So there's a bunch of, you know, attestations and ways of them proving they're actually having your money and not becoming illiquid and insolvent. So with that out of the way, thank you, Ledin. Back to my face. What's up, guys? Seeing a new few faces here. Tim, Igor, Star, welcome. If there's anything you guys want to ask, just ask in the ask in the chat, because I'm going to come back to the chat as much as I can when I go through these models. Okay. One thing I forgot to do is get myself a drink. Great job, Jack. So we good to go? I'm good to go. So the first thing I want to talk about here is the pink line is stock to flow from plan B, more or less. I kind of, you know, had to hack it together a little bit. And I cannot give you the future projections here, but, you know, we were supposed to be at 100 something K, and obviously it broke. It broke as in we never went there. There's a few things that I want to, you know, get your attention for in this chart, is that for the majority of this model, we've lived above it, above this purple line, right? It makes sense because, you know, Bitcoin was a lot smaller and things were going really well in the world. There was a lot of money, interest rates were low. Obviously, there was demand for something, you know, risky. And Bitcoin was not growing into what I think it is going to become after this bear market, which is, you know, a more of a mix between a commodity slash a store of value slash, you know, a risk asset. My point is, there's three things. You need to understand how a model is built. So when we look at stock to flow, we got to realize it's about demand versus the creation of the asset. And Bitcoin is very scarce, so the stock to flow model is going to be very, you know, it's going to go up and up and up and up. But what changed in the market is that the environment changed. We had 12 years or 14 years of like unconventional monetary policy, and that changed. It's now very deflationary all of a sudden. We're pulling a lot of liquidity out of markets. That, you know, the model is not built for such a demand shock. So could the model still be valid long term? I think so. It very much depends on, you know, how we value Bitcoin and how we value the entire economy around us. So the second thing is what influences the model, right? And in what market conditions can extreme deviations happen from the model, or the main line of it? And it's very obvious to me that at this point it makes a lot of sense that we're deviating of it. We can actually, we can draw a curve, something like this, on it, and I still think that, next, on the next halving, when Bitcoin again becomes scarcer, if we can prove and we can see that the demand for Bitcoin is still going to be there, I'm 100% sure that, we're going to track back at least to the purple line here and come back up, right? Doesn't mean that it cannot come back down here or here or here. No, because if I pull all of the money out of the world right away because my name is the Fed, it's kind of like balancing for all the time we're above it, like here and here and here. This time we even didn't manage to go above it. So we've got some exhaustion. We need to reset the market. And I think the long-term trend of this model could actually still be intact, right? If that makes sense. Does that make sense? How come I don't sound Dutch like Ten Hag? I need to listen to a Dutch person and then I can actually, imitate the Dutch accent. But when they're not around, it's pretty tough for me to do it. Dude, they haven't found million metric tons of gold, right? That was just a bullshit story, wasn't it? It's like a fake story. I mean, a funny story, but I mean, even the president of Uganda said they found it, but have they really found that? Like, do we have proof? Yeah. So, dudes, I'm getting off track here, but generally, like we just have some imbalance. We had 14 years of extreme unconventional monetary policy, and right now it's biting us in the ass, and central banks are trying to do something to fix it. I'm not really sure if they're gonna, manage to fix it, if it's gonna get fixed, but right now it's hurting markets, and this model, is just having a short-term problem. I'm not saying that it's not broken. What I'm trying to say is that, look at it. Okay, different perspective. You see, this is a three times standard deviation, but negatively to the purple line. Okay, so essentially what you see is that when this peaks, it's actually at the same point in time as the purple line here, here, and here. Oh, and that's where you see the market's top. So essentially, we've just been, this is base, this is a base, this is a base, and now this is a base. In every base, around every base, we've had a bear market. Back in 2014, it was above it. Back in, 2017, 18, 19, 20, whatever, it was, at it. And now it just seems to be below it. That just doesn't mean to me that, long term, anything of this can still be valuable. And even if the model, in terms of how much should Bitcoin be worth, is wrong, there's still, essentially it's still showing you very accurately the cycles of, where the market is going to slow down and where it, starts to accelerate based on scarcity. So the scarcity thing is still, not broken. The reason why Bitcoin goes up because of its scarcity is still kind of baked in, and you see coming back in this model. So, parts break, parts don't break. Maybe it's still valid, maybe it's not, but, understand what you're dealing with. And the other thing is models will break, guys. It's like, yeah, aside from the model, you got to freaking understand what kind of market you're in. What's the asset? What's the environment your asset is trading in? And, how did your model kind of work on? It worked on the premise of 12 years of unconventional monetary policy. Obviously, it's going to behave differently now. Let's see what's everyone saying. And then we're going to go to the next model, because that's, actually I own, which is a lot more fun in my opinion. Yeah, I mean, Creed Ticker is asking if we're still bullish for crypto in the future, and I'm 100% bullish. I mean, I wouldn't still be here if being in cash and short would not give me the opportunity to actually, get my backs deployed again for the future. That could be a completely ludicrous, a very painful decision later down the line, because nobody knows what's gonna come. But Bitcoin itself is just, I think it's a very beautiful money. What's the name of the model? This model that we were just looking at was just stock to flow. I don't know if it's gonna take years, guys. Like, if you've been watching the other videos, we talked about how, I could see the Fed kind of easing on the tightening, and then, maybe even make some rate cuts and having to push some liquidity into the market next year. And peak liquidity drain, in my opinion, is going to be where Bitcoin is going to bottom out. So that's going to be before everything else bottoms out. So I think, in my opinion, 2023, 2024, 2025 is going to be, pretty bullish on, on the grand scheme of things. What's up, RJ? Goedenavond. Oh, was that me talking Dutch? All right, back to where we were. Because this is another model. I've made it, and it's kind of based on looking at on-chain volumes and the prices paid at the moment of buying into kind of almost like a moving average, looking at acceleration. So in bull markets, let me just zoom in on it. We have implied sentiment, implied price based on sentiment, based on on-chain behavior, which we follow, and it always overshoots, right? And then for the bottoms, it comes back down. What I want to see is that here everyone's overpaying, and price kind of getting stuck, and then it reverts. What I want to see is that people do the other way around for me to think there's actually a bottom. So to summarize what I've said about this chart in the beginning of the video is that orange is early bottom, and then the next kind of orange gray is where you go accumulate a lot, and then gray is actually where you're a little bit late already for the cycle, but you can it's still a good point to buy. And orange is basically where the short-term sentiment starts to get one-on-one again with the actual price being traded, compared to what we've paid in the past, and then that's kind of a fair price. And I think that if you look at the gray one, it's just a longer, slower one, and I want to see, and let me zoom in on this to visualize it properly. I hope it's visible. I want to see people start to undercut the actual traded price. So they're underpricing it here, they're overpricing it here. I want to see this happen. Same story here. I want to see it I want to see on-chain people underprice whatever is going on, and then see price deviate from their on-chain behavior. So basically at the bottom, people actually get very bearish, they get very scared, they think it's going to go lower, and they start paying quote-unquote a premium relative to what price is. So for me, I want to see these two lines come together at price, and that's where I'm going to be like, okay, well, that's a good entry point. Do I know when that's going to happen? Is this in any way predictive? Not really. No, just waiting for the date for it to happen, and we can actually look at every day, and we can calculate the distance of the orange line. So this is the orange line that we were looking at, and this is the gray line we were looking at. And we can calculate the distance to, price. So this one here is sitting at, quote unquote, more or less 40% above the price. So, for it to be 1-to-1 at 0, there's still some leeway to go. You can see how in the past, you can see the cycles very, they're pretty clear. This one still has some way to go. So either a long consolidation or a lot down, right? In my opinion, there's two rules. No, one rule actually. No, two rules. A lot of time, little price is the same as a lot of price, little time. And by that I mean, for example, if we zoom in on what happened in March 2020, everyone was saying, dude, we need to go sideways and we need to have accumulation, yada, yada, yada. And I, generally I would agree. But if you do a lot of price in a short amount of time, that's also fine. So either you do little price, a lot of time, or you do a lot of price, little time, if that makes sense. Is there a reasonable probability the US tries yield curve control in the next few years? Yes, there is a chance. I'm going to have to see what they're going to come up with, because the bond market is kind of fucked in some ways, and yields are a little bit weird. So they will have to kind of, they will try to manage that. But that's not the topic today, dude. Like, we've been talking about yields, like, I don't know, like 10 episodes already. Yeah, so let me go back to the chart. The orange and the gray lines are some kind of like on-chain implied price based on price and volumes traded. It's a little secret. Maybe I might actually share what it is, but I work hard on these, so I don't see a reason to just completely open source everything I make and completely share what I make. I want to zoom out on this chart and show you where we can actually look at the deviation of price to the trend based on a similar concept, just slightly different algorithm. And the long time frame has just flipped bearish, and the longer time frame, the shorter time frame has, is already quite, far down the line. So if this is a full cycle, if there's a full retrace of everything we've seen, we've retraced quite a bit of it when we measure it from the bottom based on this, based on this indicator. And on the longer, on a slower time frame, we actually still have quite a little bit to go. So these are actually 5 interpretations of the cycle that I will be, very much looking at and very much sharing with you in the future. If there's any bottom signals popping up. But other than that, it's just a way to visualize that you can be wrong. Your models are always going to be, they're always going to be sticky to some extent. I mean, look at here. If you built this model back in, 2010, for example, it told you, it told you to buy, sell on the way up, blah, blah, blah. Then it told you to sell all the way down. Then it was like, okay, it's orange, buy. You got to buy now, dude, you got to buy. So you bought and it went up. So you're like, oh, wow, okay, it went up. Great. Obviously, you're going to be back in a few years and it's a bear market again and it goes orange and you're like, oh my God, okay, I should buy. Let's go buy. And then it drops another 60% on your face and you're like, oh my God, dude, the model's working. Yes, I mean, it wasn't perfect to begin with, but then in hindsight, if you project that 5 years into the future again from that point on, it was actually a great buy. So models are not perfect. This is why I have, quote unquote, in this model, early buying, bulk of your buying, late buying. when it comes to the cycle. And after that, you hodl, and then you try to find a reason to sell the top or close to the top, or hold it all the way down again and do whatever you want. If if you did this back here or compared to here, it would always have played differently. And it also about what time horizon are you playing, right? Stock to flow is based on a 4-year cycle. It's based on, the idea that we're now, we haven't completely reached the level where we should be going, and there's a good reason, because the Fed is, and the general world economy is not doing whatever it's supposed to do if you want to see Bitcoin go up, apparently. Doesn't mean that in the future that model can still hold. I'm not a proponent of stock to flow, but I'm just trying to explain that no model is perfect. And if I would become a guru on my model on Twitter, and I would have another 1.5 million followers, I would start to believe in my model in such a way that it's unbreakable, or that it will be fulfilled, or whatever. Perhaps as well, it's not unreal to consider that may have happened with Plan B. I think he's a cool dude, by the way. So, we're gonna keep track on this. I think this is gonna, I think this did a pretty good job in the past when you want to be a passive buyer and you're not gonna be trading every day in and out. What do you think? Yeah, I mean, this is about cycle buying, Crypto.live. You're absolutely correct. We're talking about cycle buying. Yeah, if you're cycle buying, you gotta prepare yourself to to average down into a 50% drawdown, or into 30% drawdown. And the problem is, if you've already had an 80% drawdown, and you have like a total of 90% on the entire cycle, from minus 80% to minus 90% on the entire freaking cycle is 50%, right? People think, okay, well, 80, 90, it's not much difference, but in fact, it's half. You just get, wouldn't the black line naturally curve down even if the price crabs? The black line here? This one? Yeah, I made that model, to be clear. In my opinion, will Bitcoin go under 10K this year? It's not impossible, bro. Do I think this bear cycle can last longer than the previous ones? I don't think it's going to last much longer. I think it's already lasting quite long, to be honest. I mean, in my opinion, in hindsight, that was the cycle peak. So it's already lasting 440 days. So maybe we have a couple months to go, maybe into next year. But I don't, I think 2023 is going to be bullish for Bitcoin. Rebecca, I keep forgetting to update my spot volume indicator. I'm gonna put it in my phone right now, okay, that I do this. And then expect me to, be delayed for another month, because I'm leaving on holiday. Alright, it's in my phone. Yeah, so in reply to Star Cadeus, how do you say that? Yes, I mean, if Bitcoin crabs from here, this is just a normal, I think this is just a moving average, bro. Yeah, it's just a moving average. So this is gonna come down if Bitcoin goes sideways. I think this is the 50. Yeah. It's just, a nice visualization that, bear markets in general, really confirmed below that, but, you already always had a huge drawdown into it. It just kind of, shows that we are getting close to these zones. I don't think we need a lot more time to reach here into that. Dude, I think that if I grow old and I shave my head, then I will be bald. Right? So I just have to worry about not shaving my hair. Crypto Dad Live. I'm not really sure. Like I'd consider. I've been thinking, okay, and I haven't shared this with a lot of people. I mean, I've hinted on it on Twitter, on my feed. What if this entire correction, guys, don't go shouting this on Twitter straight away. But what if this was just one big corrective structure since this high here? So basically, wave 1, wave 2. Wave 3, wave 4, and then wave 5, and then some corrective structure, and then we get some extended fifth to the upside, or just A, B, C, and then new entire bull market. After so basically, actually, then we would be saying, okay, well, this was bull market for a lot of years, and then everything that happened from here, when you zoom it out enough on the cycle. Everything that's happening here is kind of, the bearish correction of whatever happened here. And then after that, we just continue with, like 3 of whatever. Oh, shit, guys. Nah. Okay, let me completely redo that. Yeah, it's getting late for me too. Okay, we all see the screen now, right? Dude, what I really would like to have is this, kind of spaces on my head with you guys, and then just invite people up, and then be able to talk, and then everyone on the stream can actually listen to us talking while I'm also doing this kind of like spaces with visuals and everything. So if anyone knows how to do that, please let me know, because I'm gonna implement it like when I get back from holiday. Anyways, okay, let me. The question started with Crypto.live asking, do I consider this the cycle high, this the cycle high, and it made me think of the idea that if you're any proponent of Elliott wave theory, you could probably say that this is wave 1, right? And then this is wave 2. And this is wave 3. This is then wave 4. And this is wave 5. That makes sense. So then all of a sudden, the idea pops up that this could have been, one giant cycle leg up. I don't know, like it was 17, so about 8 to 9 years when you think of Bitcoin Genesis. And then, what if this is just a giant, flat? Maybe it comes back down. I'm not saying it's going to stop here or here or here or here, but generally, this could be some flat corrective structure that just gets us into the entire full next phase of Bitcoin. And that might actually be why it didn't rally so hard, why it got suppressed up here. Maybe we need to get all the way down here to actually, if you say this 1, 2, 3, 4, 5, so this entire thing is wave 1 on a larger scale, then this entire sideways thing could be wave 2 into wave 3 of the larger degree. So this could be ABC, absolutely. This is absolutely ABC. This is ABC. So why not from here a C wave. I don't know, like that. This could be wave 1, wave 2, wave 3, and then this could be wave 4 into wave 5. There's a little bit, a bunch of possibilities here. When we consider there's a bunch of insolvent assholes in this space, a lot of shit coins that just need to, get blown up. The Fed is tightening. Unless that all changes, I'm not going to be too willing to, just keep on catching knives and say, okay, well, we're in some kind of, bull market correction into whatever. Yes, we are on a very large scale, but in my opinion, until anything changes on the larger picture on, liquidity, stimulus, all that kind of shit, this just needs to correct, get rinsed out, get all the bad parties out, and then we can go on for a massive, chunky bull. I mean, contagion is in play. I don't know in what sense. Like bankruptcies, if they're going to be filed, these are going to take a long time. Mt. Gox is how long ago? 8 years. It's still breathing in the back of our necks somehow, and it's I don't know what's happening there. But there could there's still some coolness that could be there's still some liquidations that nothing is done. I hope they're gonna I hope the bureaucracy behind all those bankruptcies are not gonna make this a very drawn out long kind of play. I just it would be nice if we could just kind of cut out all the bad parts, throw everyone who did bad shit into jail, or at least liquidate them, and then form a new base and build from there. Because in my opinion, the world needs Bitcoin. And if they don't know it yet, they will find out in the next couple of years. Jack, hear me out. Inflation is not going down. Markets going up would increase demand and in turn increase inflation. 2 hikes later and inflation is still up. Yeah, I mean, the problem with... No, I don't want to make this about rates again, but yeah, there's a challenge. And either the market is, thinking the Fed cannot go past a certain point because they're pricing a peak in, let's say March next year in rates, and then after that it's going to come down slightly. Or, or they're going to figure out, okay, well, inflation is, hard and they actually keep on going up, and then things are going to get problematic. But for now, I'm just going to believe the bond market, okay? Because there's a lot of people with a lot of money who were right about rate hikes they signaled rate hikes back in November, and I wasn't paying attention. I should have, but they were signaling it, and I'm going to follow them because, they were right then, and maybe they will be right now. And the Fed is a piece of shit that is unpredictable. These guys know what they're doing. Ooh. Somebody deleted that message. Yeah, Burry called for a full retrace of the coast pump, and I do think it makes a lot of sense. We push so much excessive money into the market. And one thing you can learn from studying not just the last 100 years, but the last 500 years, that in general, all excess gets deleted. And in the worst case, when there was a lot of excess, it actually goes beyond the point of injection of that excess. So Burry's calling for 1800 SPX at some point in the next couple of years. That's brutal. I don't see if that if that's going to happen. I don't see. I see Bitcoin bottom at some point before the S&P 500. But guys, we're gonna have to take this month by month, and our models are only as good as as how we trade it, and our risk management. So don't do stupid things, because there will be time to buy. I don't know if cash gonna get replaced, man. I think it's gonna keep on existing, and we're gonna have alternatives, and everyone's gonna kind of, you know, try to be their own reserve currency for some time, because, you know, we're gonna be in this shift, and then something wins. Well, maybe we can talk about that gap. You know, in fact, we could talk about all those gaps. We could talk for now. Okay, wait. Hold on. I have. This is not the chart I wanted to drag in here. Hold on. Okay. Let's take a look at this chart. For example, on the thesis of, you know, this being a bull run from here into correction, into a rally, into wave 4 correction, into another rally. It's possible. I'm not saying it's not, but if we can use WM2NS, which is the monetary supply, so basically the money floating around that we printed and everything, if you compare that to Bitcoin, there's no gap here. It's just a range deviation back inside the range, right? If this was wave 1, this is the level that needs to get, that had to be respected. It was not respected, right? So it kind of wicked into it. If this goes down here below against monetary supply in the world, this, you know, throws away the idea of this being a wave 1 and strengthens the idea of this being an ABC into this ABC into correction, and then this whole thing becomes a corrective structure, a bull flag, so to say, of, you know, a very substantial leg up from 2011 or 2010 into 2017, where it started to correcting, and then kind of prepare for liftoff into, you know, the next couple of years to kind of start another secular bull market. And then, you know, I don't know if that's going to be the case, but, you know, in my opinion, the thesis for it becomes stronger and stronger. All right, let's go into gold. We've been streaming for 42 minutes. There's actually, you know, we're drifting off topic, which is cool. It's what these streams are for. This is the last. Sorry, I needed to really get a drink. This is the last model I wanted to look at. It kind of, you know, every time it hit the red line, and this is based on realized price, it was a market top, and pretty much every time it hit the green line, it was a market bottom, cycle bottom. The only time in history it wasn't was back in September, into November 2011. So, you know, that makes 1300 a really high probability place, and if that breaks, you know, we're probably going to come down into, you know, further into the range here, range for a little bit, go sideways, and then pop back above this green line. Once that happens, it's probably after the races. That's just, you know, something I wanted to share. Another model I made, I've been using to, you know, quote unquote, these two bottoms here have been moments where I just pulled the trigger really hard. Just going to quickly grab that gold chart. I think gold is, you know, I think it's still set up for whatever we've been talking on it. It's kind of, you know, it's not really respecting this trend line here. It tapped the level here. It got rejected at the level we talked about. It's been doing what I've been thinking it would do. Rates are going to keep on going up, guys. So, you know, the inflation hedge is not really true, because it's, you know, it's actually nicer to actually get your money into bond auctions, I guess. So that's a reason for people, you know, to kind of not go all in gold right now. Roland, no, I'm gonna take my mic and some other stuff with me, and I'm gonna make some videos, but pre-record, because my internet connection is likely gonna be shitty. So I'm not even gonna attempt it. So I'm gonna have like 1 or 2 videos a week, just update my view on the market. I really like these live streams, like I really do. They're a much, a lot more fun to do than the other videos. Yeah, I think we kind of lost it. We're back in the range here. We can stand this here. I think this is going to go to the middle of the range, and then it's going to be. Then I think from there on, we're going to see what's really key. I think if it reverses from here back above this level, then maybe the bottom is in. But to me, it feels that it has to retest these 2 perfect lows here, before we have before it goes higher for any reason. And perhaps like if there's going to be contagion in in TradFi, I've never seen an asset do well in a recessionary environment like gold. If you take 2000 and 2008, both times gold corrected, and it corrected less and not as deep, and it recovered earlier. It makes a lot of sense for gold to do that as well, unless for some reason it becomes some kind of reserve currency again. But you have to figure that the people who've been planning all of this to this point have been planning this for a long time, and they probably bought already a lot of gold, right? If you look at what gold has done here, a lot of that is probably can be attributed to people who thought maybe gold's going to become a reserve asset again, or B thought or knew it basically. I think there's room for correction if you zoom out on this enough. This is 2008, so it corrected a chunky 34%, and then well, actually it corrected pre, and then post the real crash, it started rallying again. So I don't see any reason that if the S&P 500 is gonna put in a 30, 40, 50% correction, that this is also not going to put in at least 20, 25. My my voice is shot, guys, so I hope that was interesting and you enjoyed that. And I will be streaming, I will be making videos in the next couple of weeks, but not be around as much. I'm gonna be with my legs up, drinking some pina coladas on the beach. So I think I'm gonna call it a day, guys. I want to thank everyone again for watching, and check out Ledden, start.ledden.io/BitcoinJack. If you sign up using that, it's good for them, good for me. And take care, guys. Hopefully I will be able to shoot some nice pictures from the beach. Cheers.